Hey, what's up, stock compounders? Brad here. So about 6 days ago, Mohnish Pabrai did a talk with SumZero, and it was actually a really good Q&A session. The interviewer was spot on with a lot of his questions. Clearly, he had a lot of experience in investing, and I just really enjoyed this Q&A. So as always, I'm going to share my highlights from the Q&A session with Mohnish Pabrai, just to really drill in the lessons that I took away from this one. So hope you guys enjoy. So first, Mohnish Pabrai is kind of reminiscing on his lunch with Warren Buffett and Guy Spear back in, I believe it was 2007. They, I think, what did they spend? $610,000, maybe $620,000 to have lunch with Buffett. And it turned out to be an incredible deal for both of them. No regrets there. But one of the guys that Mohnish Pabrai brought up in this lunch was Rick Garan. Okay, Rick Garan was a very early business partner with both Warren Buffett and Charlie Munger. Okay, so Pabrai wanted to know, what's happened with Rick Garan? Are you still in touch with him? And of course, Buffett responded in a way that taught a lesson, right? Buffett is incredible at doing that. So in 1973 and 1974, Rick Garan was levered, okay, in his portfolio. And, it was a terrible crash in the stock market in 1973 and 74. And of course, Rick Garan got margin calls because he was levered. Buffett bought a lot of Rick Garan's Berkshire Hathaway stock because he was forced to sell at $40 per share. All right, these are the Class A shares. So those $40 shares from 1974 would be worth over $400,000 today. That's a 10,000x that Rick Garan gave up because he was in a hurry to get rich. Okay, he was using borrowed money to juice the returns in his portfolio, and he got caught. Right, he got caught in a downturn. So that's the big lesson. Don't be in a hurry to get rich. Warren Buffett and Charlie Munger, they always knew that they were going to get rich, but they were not in a hurry to get rich. They wanted to make sure that they were actually going to get to the promised land. Okay, and if you try to push too hard, you could knock yourself back. So that's a really important lesson. He asked Buffett, who would you want to have lunch with? Okay, and Buffett responded, Newton. Okay, now Franklin was the wisest. Okay, but Newton was the smartest. And what Buffett is really curious about, particularly with Newton, is that Newton got taken out by the South Sea bubble. Okay, brilliant man. I mean, he came up with physics, basically, right? The foundations of physics, but he got caught up in a bubble. All right, so Buffett, he's just curious, how does somebody so smart get, basically hit financial ruin because of a bubble in the stock market? So that's fascinating. I'm definitely curious to know more about that as well. How Newton played the whole market and got caught up in crazy activity during a very speculative time in the market history. This was fascinating. So back to Warren Buffett. When Buffett was a kid, I love this story, he would walk with his knees bent slightly forward because he didn't want to fall. All right. So Warren Buffett, as a youngster, altered the way he walked to be closer to the ground, okay, to be more stable. Because, he wanted to reduce his probability of falling. All right. He didn't care what he looked like. He was so focused on the downside. All right. How do I avoid something bad happening here? How do I avoid falling? And just out of that story, you can see how he developed an intense focus on downside protection, right, from an early age. Where are the risks here? Where are the hazards? and how do I adjust to avoid those as much as possible. So I love that story. It's such a spot on story for how Buffett has invested over 7 decades or so. It's just, I love it. Pabrai was asked about running screens. How does he screen for stocks? What is he screening for? He says, I don't run mechanical screens. And the reason for that, businesses are so different from each other. Okay, a business like Amazon wouldn't show up in a screen. So what he does is he reads write-ups. All right, he reads SumZero write-ups. He's a member of the SumZero community. Value Investors Club write-ups, VIC. We can all access those with the 45-day delay for those of us who haven't had write-ups accepted by VIC, but that's okay. 45 days isn't too bad. And then, of course, people send him write-ups. I believe Rain Industries, an investment in India, someone sent him the write-up for that, which led to him buying Rain Industries. So, there's a few questions he asks when he's looking at write-ups. Is this a great business? Is there an asymmetric opportunity, right? Heads I win, tails I don't lose much. Is the bullish upside large enough to be interesting? So he's not looking for, a stock that's trading at $15 that's worth $20, okay? He's not interested in that kind of upside. He wants, multi-bagger, probably, I would say 5x or more. And right now he's interested in the long-term compounders, companies that he can buy today and just trust the management team to compound his money over time for him, right? That's sort of the recent shift from the buying 50-cent dollar bills to buying, companies that he can just leave the money with and let them do the work. So those long-term compounders, he wants lots of growth, a reasonable valuation when he buys, and a strong moat to be able to continue compounding those returns over time. Where are you finding value now? Turkey is the country of most interest to Pabrai right now. Okay, Turkey and China, as we'll see. The currency has collapsed in Turkey, and that makes it pretty compelling to Pabrai. And he talks quite a bit about Turkey. I'm not going to go too deeply into Turkey because I haven't figured out how to invest there. And, these points are pretty nuanced to Turkey. But one story I really enjoyed is the bank with the PE of 0.1, okay, 0.1 price to earnings ratio. There was hair on it, I will say. This is a fantastic tale. Listen to the whole talk, which I will link in the description. It's well worth hearing Pabrai talk about Turkey. But again, I'm not going to recap it here. So he's asked, let's move on from Turkey. What are some names you like that an average investor could invest in? Okay, most people can't invest in Turkey. Some of these have changed in price and value, but about a year ago, I invested in Seritage Growth Properties. It's a business that I've talked about quite a bit on my channel, as many of you know. The price collapsed after the pandemic started. Took an 80% stock price hit, okay? So I think it was somewhere around 40, maybe upper 30s per share, dropped down to like 6, okay, 6 or 7. I think Pabrai got most of his stakes somewhere around $7 per share. And now it's somewhere around 18, if I had to guess. I didn't check today, but recently it's been around $18 per share. He says, I'm not sure it's a buy at these prices, but definitely very compelling a year ago at $7 per share. So that's Seritage. He's going to hang on to it, but not sure if he'd buy it at current prices. We also have a position in Alibaba, okay? And he actually talks quite a bit about Alibaba, which I will get into here. He's asked, what is the overall thesis with Alibaba? It's an incredible business, okay? Pabrai has studied Alibaba as one of these spawners, particularly an apex spawner, where there's kind of multiple types of spawning that Alibaba has done through its business model. Why is it an incredible business? The ecosystem, right, that it's operating in China, the moat, what they control, right, the businesses that they have under the umbrella of Alibaba, the China tailwinds, okay? E-commerce is really just getting underway in China. There's the average household wealth is growing at a pretty impressive rate. And there's just so many more people in China than there are in the US. And it's much earlier in terms of, people coming into, what's the word? Having money. I know there's a better word for that, but in terms of consuming, the consumer culture in China is really just beginning. So there's huge tailwinds there. There's a lot to like, even more than the large US tech, okay, about Alibaba. There's serious barriers to entry, probably more so in China than there are in the US in terms of tech. Alibaba is a crown jewel for China, just like Tencent. Okay, so Pabrai kind of talks about Alibaba and Tencent as these outliers in China, as these great businesses with unique DNA. These are the plays that have the possibility of global footprints, right? The crown jewels of China, Alibaba and Tencent. So I don't think the government will take an approach that will kill the golden goose. All right, that's really important here. My take is they've extracted their pound of flesh and sent a pretty clear message who's in charge, okay? He doesn't expect much more than what we've seen already, right, with the fines imposed on Alibaba. In the long term, much of the value creation for them is cloud, okay, similar to kind of what Amazon has really been able to develop over, the last decade or so in AWS, which is non-existent from an earnings perspective today. All right, so cloud is very nascent in China. A ton of room to grow into that business for Alibaba. The cloud margins are incredible. Very few people can play, very few businesses can play in the cloud game. In the US, the game is for the most part over. All right. So to me, the DNA of Alibaba and Tencent is what is unusual. Okay, they have unusual cultures and DNA in terms of how they operate their businesses. He's asked, do you prefer Baba to Tencent? Okay, the interviewer was very direct on a lot of these questions, which I appreciated, and Pabrai was pretty open about answering things that I wouldn't think he would normally answer. He usually doesn't talk about positions that he currently holds. So do you prefer Baba to Tencent? They are both really good businesses. I think Tencent is interesting to look at through a Naspers lens. All right, you get that extra discount buying Tencent through Naspers, which of course is the newspaper company in South Africa that bought a stake in Tencent before it was even public. And that's the vast majority of the portfolio for Naspers currently. He's asked point blank, do you own Naspers? Now here, Pabrai retreated a little bit. I cannot comment on things that are not in the public domain. I like Naspers. All right, so he comes out right and says he likes Naspers. I think Baba and Tencent are similar, but they are also very different. Tencent has an incredible investment portfolio. There's a lot there that will be huge in the future. All right, so that's, I think, primarily what he's interested in Tencent for is the investment portfolio. So, he doesn't say that he owns Naspers. Naspers is so big compared to Pabrai's portfolio that Pabrai isn't going to have a 5% position in Naspers. So, I don't think there's going to be any way that we're going to know if he owns Naspers or not. I don't really understand what's required for disclosure in South Africa. Maybe Ticker Terminal will pick up that Pabrai owns Naspers through some disclosure. I'm not sure, but my sense is that we're not going to know through any kind of filings whether or not Pabrai has bought into Naspers. But my sense is that he has, okay, based on what he said in this interview. Back to China. It used to be that the Chinese were copycats, right? They would, take what U.S. businesses were building, innovating, and kind of steal those ideas. Now the U.S. is behind. Okay, China is ahead with this innovation, and I think companies like Facebook have their marching orders. They're trying to clone China, right? They're trying to clone the great ideas that are coming out of China in the tech space. The U.S. has the lead on cloud. Okay, that's where we have an edge. We have a lead. But for most of the other stuff, China is ahead. Okay, that's just where we're at. Alibaba and Tencent don't fit the template of typical Chinese businesses. All right, so he's asked about Baidu here. Have you looked at Baidu? What do you think? He's really focused on Alibaba and Tencent. Both from the early days had international backing. Okay, so they had investors from all around the world. They have what Pabrai would call enlightened leadership. To get more on this, I highly recommend the book Alibaba, the House That Jack Ma Built. Okay, it really gets into the culture that Jack Ma was trying to cultivate at Alibaba. They've been very good partners for their international investors, both Alibaba and Tencent. Both businesses are playing the long game, okay? They're not willing to cut corners, to squeeze out extra earnings to meet, quarterly targets, all right? They're playing the long game, which is great. I mean, it's exactly what, Nick Sleep and Zakaria at Nomad Investment Partnership were looking for with this scale economies shared business model, okay? They're, trying to pass a lot of the benefits of the business back on to the customers. And it's not the quickest way to make a buck, but it's a great way to ensure business longevity and dominate the market over time. So that's what Alibaba's approach has been. He's asked about Amazon, right? Do you own Amazon? Do you like Amazon? It's probably a mistake that I'm not buying Amazon. Okay, that's what Pabrai says. Now, I know Pabrai is a bit of a cheapskate. He looks at the PE of Amazon, and it's really hard for Pabrai to pull the trigger on something like that. But he comes out and says it's probably a mistake that he's not buying Amazon. So, that's intriguing. That's something to think about. Most important attribute for an investor, right? What is the single most important attribute for an investor? And again, Pabrai comes out with, you like watching paint dry, okay? Extreme patience is the most important attribute for an investor. And again, that goes back to the idea that, we're treating stocks as ownership in a business, and we're looking at that business as a founder, right? And we're riding it. He talks about Walmart, how so few investors have held Walmart for more than a couple decades. And if you had simply done that, you'd have just done incredibly well. Obviously, there's survivorship bias there. Doing that for many, many companies over the last 50 years would not have worked out well. So obviously, that's something we have to weigh. Naspers, again, he says Naspers is a hero of investing, buying Tencent in 2001 and holding for 2 decades. I mean, there had to have been so much pressure to sell off Naspers. And they didn't. They held. So, part of what I think Pabrai sees in Naspers is the same thing he saw in these founding families, like the Walton family in Walmart, just holding for decades, right? So I think, he's got a little bit of a crush because of how long they've managed to hold on to this early bet in Tencent. 32 million in Tencent in 2001. It's been an 8,000 bagger over the last 2 decades. Okay, that is incredible. 8,000 bagger. The only thing I've seen that's somewhat close to that is Monster. Okay, I did a post on Twitter a few days ago, documenting 1,000 baggers or more in the U.S. since 1980. There's only like 11 or 12 of them. And Monster, if you'd bought in like 1997, it's like somewhere between a 6,000 and 9,000 bagger, depending on exactly where you bought. But right up there with Tencent for this Naspers buy. Is there a never sell business you like that's U.S. based? Okay, because this is what Pabrai is all about right now, is buying businesses that he doesn't even have to think about selling. He doesn't have any in the U.S. All he owns is Micron and Seritage Growth Properties in the U.S. Micron is a toll booth for new data centers. Okay, 20 to 30% of the cost of those data centers go to Micron. Okay, so it's a great business. It does have high CapEx, right? High capital expenditures, which isn't great in an inflationary environment like the one seems like we're in the U.S. Kind of guaranteed outlay of capital into the future for Micron. So not necessarily great, especially when you're in a business, where your product is something of a commodity, right? These memory chips. So that's not great. And goes through cyclicality. Obviously, Micron goes through pretty deep cyclicality. So, I'm sure Pabrai will sell Micron at some point, probably somewhere in the next 5 years, if I had to guess. It's not a set it and forget it kind of business. Seritage may look different 5 to 10 years from now, which I think implies that Pabrai might be looking to sell 5 to 10 years from now. I think he's mentioned that before. So again, not a buy and hold forever in Seritage. I feel much better about holding RYSAS, right, the Turkish warehouse company, than either U.S. businesses. Where is he looking? Large Chinese tech is interesting right now. Turkey is interesting right now. So those are really the two spaces that Pabrai is excited about, right? He's really turning stones over in Turkey and large Chinese tech, particularly Alibaba and Tencent. So that's it, guys. Those are my highlights from SumZero's interview of Mohnish Pabrai. Fantastic as always. I'm loving this. Every couple weeks, it seems like Pabrai's got a new Q&A session out. So keep these coming, Mohnish. Much, much appreciated. And with that, I will see you all in the next video. Take care.